Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to highlight the key markets that we need to be looking at for this week. We're going to talk about the big-time events. We've got a big one on Friday and also some controversy surrounding that event already. We've also got a metals market that is absolutely exploding right now. We talked a lot about silver on Friday. We've got more news, some things that may have been overlooked, but these stories are really starting to catch some serious attention. I've been listening to the silver and the metals analysts all day long, and they're absolutely going crazy right now because the level of participation that's flying into gold and silver is driving these things to all-time highs. We've also got a copper market that's on the verge of a big-time level too as well. I don't talk about copper much. We need to talk about copper. It's actually a fantastic way to diversify your holdings. Copper futures are great if you want to get in and trade copper futures. I've traded them in the past. I really like the copper market because the margins are doable. We're going to go cover a copper CFD today, and right now we're trading at 491. What do you think I'm going to say, guys? Next big round number's 5. I mean, we're coming into really just some great trading, some great levels, some historic events on the markets. A lot of folks are flying into metals. I think it's the number one story in finance right now. We've also got a Euro USD pullback potentially that we may be able to get a quick scalp on, and also some trade updates on the Kiwi CAD US 100 and a fresh gold idea out earlier today. I had to put it out because gold's going up in leaps and bounds, and I think that if I wait, we might actually miss our scalp. So we need to get all this stuff taken care of and more. And of course, any kind of question you guys want to ask me about anything, I'm more than happy to help. If it's a trading question, great. If it's a life question, I'll do the best I can. If it's a gambling question, I guess I probably know a lot about gambling too. I want to congratulate my University of Montana Grizzlies with a big win on national television Saturday night late over the Idaho Vandals. Really enjoyed it. I was in the crowd. You can hear my voice is a little bit hoarse because we were going crazy at about midnight when that game was finished local time. So a lot of fun there. Always a great time of year, guys. Lots of trading happening right now. Lots of business happening. The news cycle is interesting. Trump's talking right now with a conference with Israeli leader Benjamin Netanyahu. We don't really know what's going to come out of that. I think that if you're trading tech stocks right now, be careful. Be careful. There's a lot of talk from Netanyahu about TikTok. Trump's addressing TikTok. They don't know how they're going to treat that company. And remember, just because maybe you don't have a bunch of holdings at TikTok or maybe it's not tradable or whatever, that's going to spill into a lot of the other companies. Keep an eye on Meta. Keep an eye on Alphabet. Keep an eye on all those big tech companies, the FANG stocks. You definitely want to be watching today because, you don't know the next word out of Trump's mouth. And it could be anything. And it's really driving prices in the markets, in the stock market especially. It's driving them crazy. That's one of the reasons I believe we have a lot of compression right now in U.S. stocks right now. I mean, look, take a look at that. The Dow. Dow's off about 50 points. S&P 500's up 9. NASDAQ's up about 92. So a flat day on a Monday, not out of the ordinary. We pretty much expect that type of thing. Realistically, Mondays are typically flat. And that's one of the reasons why I go very slow. We'll talk a little Monday psychology here in just a second. Andrea Gorwal, good to see you. Andrea Lita, always a pleasure, Lita. All right, guys, let's go ahead and get to it. We've got a few things that we need to cover that are very important, so you probably want to get out your pen and paper and write down some of this stuff because it's absolutely imperative that we understand Friday is going to be our keynote event. We've got to go ahead and address that right off the bat because you got to be ready for what could happen later this week. All right, remember, if you want to trade any of these trade ideas or these markets that we talk about today, check out Switch Markets. If you're an international venue, you've got market access. If you're here in the United States and you're looking for a broker, reach out to me in private chat on the How to Trade website, and I will be sure to point you in the right direction. Remember, we've worked a little bit with Owanda in the United States, so if you're looking for a Forex broker, Owanda is probably a pretty good one to start with, but the rest of them, it'll probably just be my own personal opinion, and I can give you some ideas about places that I've traded over the years that have been pretty good and maybe a few that aren't so good. But those aren't, there won't be any rhyme or reason to it. I'll just tell you what I think, and you can go from there, do your own research. But in any case, a few awards, Switch Markets, the folks at Switch. I showed these last week, and we'll show these for a few more days, but they're definitely happy about the folks in the back office are very pleased about the performance at the Global Forex Awards for 2025. So there's a few nice wins there. A lot of folks are really happy around here. So the big keynote event this week, and we need to get right to it before we do our trade updates. U.S. T-bill auctions, that's nothing. We're going to talk about that in a minute. UK GDP, consumer confidence, and JOLTS, big day tomorrow. Business will pick up tomorrow, guarantee it. Wednesday, EU CPI, ADP, employment change, ISM PMI, a big Wednesday. We didn't even really talk about EIA crude oil inventories. A lot going on Wednesday. So Tuesday, Wednesday looks pretty good. Thursday is going to look pretty good as well. Friday is the keynote event this week. U.S. non-farm payrolls, that's our NFP numbers. That's what's going to give us sort of our look at the jobs market, and it's going to kick off a fresh round of, I call it market angst, just because everybody wants to know, are we going into a recession? Are we going to get rate cuts? Are we going to get rate hikes? We don't really know. But we do know that the last couple of jobs numbers have been absolutely atrocious. The last jobs report was probably the worst that I've ever seen since I've started doing this. We're coming up almost on 4 years in January. But realistically, guys, this NFP Friday is a big deal. Now, here's why it's going to be different than many of the other ones. If we go into a government shutdown, which there's a hot debate, we believe that probably you're going to see a government shutdown coming our way, more than likely Wednesday-ish, Thursday-ish. I don't want to speak to the absolutes of this because nobody knows. And over the years, I've covered a lot of these government shutdowns. We've talked a lot about them. The last one wasn't, I don't believe it was last spring. It was the spring before in that election year, 2024. And we were looking for that government shutdown caused a ton of market angst because a lot of people believed that the U.S. was actually going to default on some of its debt for the first time ever. Now, that didn't happen, but we had to be ready for it. This is interesting right here because Labor Department won't release Friday's key jobs report or other data in case of a government shutdown. So we've got to be ready. We've absolutely got to be ready for this. I don't believe that it's going to happen. I think you're going to get your NFP without question. But we have to really understand that if we don't get our jobs numbers, it's going to be probably a dull morning. I'm going to be up early anyways, and I guess we'll trade it, but it's going to be a dull morning if they cancel NFP. The labor market is preparing for what would amount to a news and data blackout should the U.S. government suspend operations. A news and data blackout. That's going to put us in a precarious position as traders because let's say the government shuts down for a few days and then they come back online. Are they going to drop the NFP numbers right away? Are they going to wait for the next Friday? Are they going to immediately hit the news wires? This is potentially a very tricky situation, and it's one that I haven't really been faced with before. So anytime we don't know what's going to happen, caution is the better part of valor. Be very, very careful. I will keep you up to date every day. Anything that I see, I'll be blowing it out on X. I'll be doing it here inside of the trading room. So just be ready for anything. If they don't drop the NFP numbers, that could be problematic in a lot of different ways. The department has several key reports upcoming that will provide important clues about the direction of the economy and inform Fed policymakers ahead of their next meeting in October. Now, the idea that the Fed is not going to have access to these numbers is hogwash. The Bureau of Labor Statistics will give the Fed the numbers. I believe the Fed already has the numbers. Now, what I think and what's going to happen to the markets are two very different things. If they don't drop this NFP report on Friday, the first thing we have to do is figure out when it's going to be disseminated to the public because it is a five-star major market mover. That's absolutely key. So I want to start off today's stream with that. I think it's very important that we understand what could be coming our way. Not necessarily what is coming our way, but what could be. I don't want to spend a whole lot of time on it because I just don't know. But in actuality, it's an event that we have to be ready for. That's all there is to it, guys. All right, trade update, Fibonacci support in view for the Kiwi CAD. This is a fantastic trade. This is one that really came our way, and we actually printed up our profit target a little bit earlier today. You can see a monthly Fibonacci retracement sequence, the back end of the golden zone at 62%, right around 80.19. We had an 80.26. An 80.26 type of an entry here. And let's just go ahead and pull up maybe a 4-hour chart. That'll give us a pretty good look at what happened. And it really did turn into a swing trade. It turned into a swing trade. We thought that we could get a quick scalp potentially out of it. We didn't. We ended up getting the money, though, and that's what counts. Right there was your low. We hit entry absolutely beautifully. 80.26, an absolute great spike. We got that. Got a nice bid, and then you got 80.26 rallied right up to our key level, right above our next level, which was at 80.62, and this was about at 80.66. So we cashed that ticket. I'm very pleased to see that one hit the profit target. I thought that you can never say it's a lock. I don't want to sound like a hack here. I don't want to sound like one of those sports gambling touts or a stock market tout that says, okay, this is a lock. This is going to go up. I didn't know. But I knew that the back end of that monthly golden zone is a fantastic zone. There was a lot of traders that were trading the Kiwi CAD because of the action in the Canadian dollar. This was a pretty good one. Now, we've got another trade idea facing the CAD. I'm not going to recap it today. We'll talk about it later this week because I do believe we're going to get our entry, but I covered that all last week, so that was definitely in the cards as well. Very good, though. I liked this. I like the way that this panned out, and I'm very happy with how exactly that trade developed for us. It just took a little longer than we first thought. We got to be patient. We got to be patient. That's one of the keys here. We had another trade update. Inflation cools, 25,000 in play for the U.S. 100. Absolutely huge that we understand key levels and how they work. I've been sort of preaching this more and more and more. You don't have to believe in key levels. You don't have to trade key levels. Be aware of key levels. So right here we have a trade idea to the short, which is going to be a scalp right in front of 25,000. And I believe our entry point is what, 24.97 or 24.9 and a quarter, something like that. I can't really read it. It's too small on my screen, but 24.9 and a quarter. And we're looking for a lot of pips here. We're looking for a big move. We're looking for about 24, a pullback back down to 24.775. So about 200 points. I believe we could get that easily. And the reason why I would say that is because it's a big time zone. It's a big time level. Now, the only thing that's really problematic about this is our profit target, or excuse me, our stop loss. Our stop loss is going to be right back up above 25,000. So what we're trying to get accomplished here is we're trying to get a pullback from 25,000, and we're going to enter in front of 25,000 to the short. Very, very easy idea, very easy concept. I'm going to break down how this trade potentially could look and could develop here relatively shortly. Let me see. Yes, sir. What's the chances the yen breaks 150 this week? We'll look at the yen. I think that dollar yen, absolutely. The odds of it, it depends on what happens with your NFP report and all those key events that I showed you. We'll look at it, though. We'll see if we can get a little heat. The yen typically it finally broke out, and we got it on the 920 last week. That was really a beautiful trade. Blew up in our favor. Great trade, right? Well, now things look to be changing a little bit for the yen, and I don't really know what to make of it. I think that the idea that the BOJ is going to eliminate a lot of those ETF holdings has definitely swayed the market. It's blown it up just a bit. Let me see. Bobby Bob, good to see you, Bobby. Welcome. Key levels are king. Yes, sir. I'll tell you what, if you know where your key levels are, you can do very well trading and investing. You really can. The problem with trading key levels exclusively is they don't always come into play. And when they don't always come into play, we've got a real challenge of waiting. Do we wait? Do we try to adapt maybe a crossover strategy or an RSI or a stochastics to get us in the market? The problem is 25,000. We're going to get one shot at 25,000 in the US 100. The first test up is what I'm interested in. We're going to get one chance for that scalp. So we need to be ready for it. But also, after that trade develops, we're going to have a lot of different things we can do from 25,000. But I do want to be aggressive here and get in. I'm on this really first rush up here to take a look at this key level. So key level is 25,000. You've got a nice rally potentially that could take us there easily. Right now we're trading 24,601. Remember, we're going to be looking about 24.9. So we're only about 300 points away from this potentially being as our sell. One of the things that's jumping off the chart at me right now is the significance of 24,750. Now, this is sort of the thing that you really only know in retrospect. I don't like pointing these things out after they happen. I really believe that it's not necessarily a good practice to always be reverse engineering what happened yesterday and the day before, saying, see, this is what key levels can do. But really, this is what key levels can do. You're looking right at 27,750, 24,750, something like that. Right in there, this top right here. You guys, a lot of you are smart money traders. Well, take a look at what happened here. Absolutely fantastic price action, and this would be probably what they would call a liquidity sweep. Test of what? What's the high right there? 24,781. So we went up above 24,750 by about 30 points, and then we plunged. Okay, we plunged big time. Nice 3-day sell-off, and then the second chance was just almost better, really. 24,748. So 24,750, clearly there's sellers there. I expect the same type of thing to happen at 25,000. So that's why we put this key level up here. Now, is it guaranteed to work? No, nothing's guaranteed to work. All they have to do is step in here and just bid this market, run everybody out over 25,000, and then look to take the short. We're going to be ready for that. You know, we're sort of frosty. There's an old saying, you know, stay frosty. That means stay cool and faced with pressure, but also be frosty, be ready to act. That's absolutely key, and that's what we're trying to really, I mean, like I've said the word preach a couple times because I have been sort of harping on key levels and all the different things we need to do as traders to be successful. But really, I mean, 25,000, if we're not aware of 25,000, and if there's traders out there that aren't aware of 25,000 in the US 100, I would really question your aptitude. And I never question aptitudes because I believe there's a million different ways to trade. But I got to tell you, I don't care if you're scalping a 1-minute chart and you're trying to go long right at 25,000 on that first test, you're probably going to get liquidated. Now, could you be right and get the big break over 25,000? Of course. I mean, we have traders that are probably watching this chart pattern right here saying, okay, what do we have here? Potentially, you have the development of maybe a couple to handle. There's your test. There's your pullback. So what would you need right here? You'd have to come up here and then stagnate for a couple days, put in a nice handle. That's a terrible drawing, guys, but you see my meaning. Very bullish breakout indicator. So if we were looking at that, something like that, I'd say, okay, if you're going to play a breakout over 25,000 and you want to do it from down here, I'd say go right ahead. I'm not interested in that. I'm going to play the short from right underneath 25,000 and get this pullback right down into this zone. We should get it relatively quickly. That's one trade that we shouldn't be in the market very long for. If we are, then I would start to question it. But once again, just to draw that coupled handle again, because that was absolutely terrible. This is sort of this curve tool on TradingView is a little bit better. So there would be your cup right there. Let's go ahead and see if we can do it one more time. And this would be sort of your handle. Now, what does that mean? It's a run, it's a failure, it's a pullback, a second test, and then some compression, some stagnation there off of that back end of that cup. Could setup, could be pretty good. I'm watching that closely. If we get that, then I could believe that we're going to run right up to 25,000 from 24,750 being our launch point. It's great trading, though, guys. No matter what you're doing there in the NASDAQ, this is pretty good stuff. This is fun. Right now, if you're not having fun in the markets, sort of step back, maybe take a rest. Maybe you're just tired. But there's so much action right now that we should feel very good about trading. Even though the markets aren't necessarily breakout trends every day, we've got a lot of patterns setting up. We got a lot of things going our way that could potentially make us a lot of money between now and Thanksgiving, the end of November. I like it. I think we got an opportunity here to do pretty well. Let me see. Lebo, good day. Happy to be here. Well, congratulations. I'm happy you're here. It is a good day. It's always a good day. It's Monday, right? It's Monday here. We're in the markets. Who has it better than us? Not many. Okay, so right there, definitely a trade idea worth watching there. I'm going to go ahead and recap the last one. I'm going to do this one quickly, though. Metals breakout, 4,000 coming up for gold in the in the XAU USD. Interesting. Spot gold's absolutely exploded. I've been calling for 4,000 for quite some time. The idea here is very simple. It's very, very similar to what we just talked about with the 25,000 level. We're going to look to grab that short right in front of 4,000. This is going to be a quick hitter, but it is for a lot of points again, about 2,000 pips. Now, if you're going to dial this trade in with the entry point that's out there, be very careful with your leverage. I recommend 1 to 3% of your trading account balance on any given trade. So if we have a big stop loss, like we have right here of about roughly $20, something like that, if that's going to be the case, you've got to dial down your leverage so your per pip values are very, very small. That's important. You don't want to go in too heavy and get stopped out before the getting really gets good. So I see 4,000 much the way that I see 25,000. I think it's going to be a great area to trade. And if we get stopped out the first time up, we're going to be ready to be potentially short or buy the launch point from 4,000. Now, there's no question what's going on in the market here with metals is absolutely astounding. We haven't seen breakouts like this in quite some time. We haven't seen them in quite some time. And when we look at what we have going here, a potential, roughly, I mean, what could you really say? I mean, what can you say about a trade that you're trading a level that's never been hit before? Well, we're trying to capitalize on those algo traders. We're looking for institutions and sort of, I call them big wigs or big money. We're looking for somebody that wants to gamble on 4,000 being a top. And believe me, there's going to be plenty of them. There's going to be plenty of folks going, well, we might just call an intermediate term top here at 4,000. But those algos are going to be scalping right in that zone, and it's going to be relentless. The volumes up around 4,000 are going to be huge. Now, that's going to be an area two-way action. And what two-way action is, that's when you've got buyers and sellers, and they decide that they're going to have a fight. They're going to duke it out right at a key level. 4,000 is a big deal. I would call it an area of natural resistance. All we're looking for is a little bit of shake right there. All we need is a little bit of conflict. Maybe the sellers step in and win for a while. Maybe the buyers end up winning in the long run. But all we've got to do is get a pullback there. So if you're interested in that trade idea, head on over to the How to Trade Trading Room. Just go ahead and click and follow me. Those are beamed out up to your email automatically. If not, they're in our analysis thread or analytics thread there inside of the trading room. But we put that one out earlier today because that was one. I saw the trajectory of gold right now, what's happening here. 38.26. I was calling for 4,000 potentially being in, February, January. I'm wrong. It looks like it's coming, and it's coming now. So that's what we're looking at here. The only thing that's hotter than gold right now is silver. Silver's absolutely exploded. I do want to take a look at maybe some intraday time frames here, though I understand that monthly charts probably bore most of you. But with so many big-time key levels that are coming into play, I would be remiss if we weren't attacking the macro technicals facing these markets. That's absolutely huge. So right here, you've got a 4-hour chart with the gold. What do you really want to get accomplished? You want to buy it. Now, I've put out a lot of these trade ideas over the last month or so on gold that really speak to buying short-term retracements, and it's been hard. We haven't really got a retracement yet. If we, we've done it on real short time frames, but we haven't been able to get one on, say, a 4-hour. So something like this, where your low's 37.59 right there, that spike low 39.60. This Jones, or excuse me, that spike low right there gives us a pretty good pullback area. The only problem that I have putting this trade idea out is by the time I wrote it up, it probably would be dead, meaning we're pushing so high so fast that we're at 38.26. Is there any real reason why 38.33 would stand up as the top? No, there isn't. I mean, right now there's no more rules when it comes to gold. And silver we're going to talk about in a minute, but gold especially, about the only place that I would even consider shorting from is what I showed you up there around 4,000. I'm not interested in shorting anything on the short time frames. I don't believe that consistently you can get that done in such a bullish market. I think that shorting right now is a mistake. Now, if you are shorting on, say, like a 5-minute chart, and let's say you've got like a smart money concept strategy you're working, that's fine. It doesn't matter. It really doesn't matter what I think about that, because what you have is you've got like this 5-minute chart, for instance, all day long. What do you got? You've got pretty much a quadruple top right up there on the 5-minute chart. So you're at 9 a.m. my time, and then 45 minutes later, 50 minutes later. So we could definitely say that if there were smart money traders out there that wanted to play to the short off of those liquidity sweeps, it's working. It's working great. And I don't have a problem with that. The 5-minute chart, if you've got a strategy where you're dialed in with your risk, that's what it's all about. So don't ever let me scare you off of a trade. Just because I say things like I would never short gold right now, that doesn't necessarily mean I wouldn't trade gold on a 5-minute chart to the short. What I'm talking about is, would I commit and stick my neck way out there to short this market? No way. Not a chance. Not interested. But if I was going to scalp up here saying, okay, there's our liquidity sweeps, we're just going to go ahead the next trip up there, we're going to sell. Maybe we're going to sell 38, 32s and try to play that for a real tight scalp, maybe 1%, 2%, 3%, maybe a $4 stop loss, looking for $4 on the payback. I got no problem with that. That's completely different than digging in and saying, okay, I'm going to go sell my truck and I'm going to mortgage my house and I'm going to pick the top of gold. You don't even want to try to do stuff like that. If you do, and you're right, you'll make a fortune. There's no two ways about it. The problem is fighting such a strong trend. The odds of you being right are not very good. So remember that when you're fighting trends, that's how about 90% of the people in this world lose all their money in the markets, is they fight trends believing that they can find the top. And their technicals tell them the top's in, and their gut tells them the top's in, and their brokers may tell them the top's in. We don't do that here. We don't try to pick tops. We don't try to pick bottoms. If we do try that, we do it with our risk very tight. So if we are right, then it's a big winner. And if we're wrong, it's not the end of the world. You definitely want to be aware of that. Pretty good stuff right there on gold, though. So if you're scalping intraday charts, I don't have a problem with it. Right there, though, you could definitely be looking at a 4-hour bid. If you could just get a pullback down to like 3,800, 3,805, that's great. Do you get it today? I would be very surprised. I'd be very surprised if you got that or not. Let's see. We got a few questions here in the live chat. Let's go ahead and take a look at them, and then we're going to go over our fundamentals. And I do want to get to silver because it's absolutely imperative that we take a look at this breakout, and also copper, Euro USD. We also got that on tap for you as well. If there's any markets that you guys want to look at, stick them in the live chat. We'll look at them. You'll notice I haven't been talking much about U.S. oil. Is this the week we get the big sell-off? I don't know. I don't know what's going on with oil. And I know you guys don't want to hear I don't know. Sometimes there's a lot of power and I don't know. Wise men and women say I don't know a lot. We don't know much. We just know how to trade. We know our strategies. We know our risk management, and that's what keeps us alive and kicking each and every day. Remember, you do not have to know what happens in the market to make money. You don't have to know. Pardon me, my voice is a little bit blown out from Saturday night's football game. Just excuse me for a second. A lot of fun, though. Congratulations. Nothing like a big game atmosphere. It was on ESPN. A lot of fun. Huge crowd on hand, at least for Missoula, Montana. Huge crowd. Sellout crowd. Very loud one. Very angry one. It was a lot of fun. Let me see. Lebo. One thing trading taught me. It taught me that I'm not a scalper. I'm definitely, without a doubt, a swing trader. That's fantastic. I thought I would go into scalping, but I found so much comfort with swing trading. That's, it's a very wise thing. I scalp, and it's put years on me. I think that swing trading if you're an international trader, let me put it this way. If you're an international trader and you have access to CFDs and your swap fees and your carry fees are relatively realistic, they're not huge, you can be a very, very effective swing trader trading CFDs. Now, in the U.S., it's a little bit different. If you're going to swing trade, say, equities indices, you're probably going to have to be trading micros unless you have a lot of money and you can deal with the overnight margins. But still, you can trade like micro, E-mini S&P 500, E-mini Dow, E-mini NASDAQ. You can do those things. If you're a stock trader, I really like swing trading stocks with that 920 EMA. That's a lot of fun. There's no pressure. It's dial in your risk, get your entries, put your stops down. There's no pressure. You just let the trades run and see how you do over time. I mean, that's easy. I mean, it's relatively straightforward. So I really like that. And then also your Forex pairs. Just remember when you're swing trading, you keep your risk. Your risk is going to change a little bit because your stop losses are going to be much bigger than they are scalping. But that's not to say that it's a higher risk type of an environment. As long as you're only trading that minimum 1 to 3% of your account, and I will look the other way on a 5%. If you come to me and go, Shane, I love this trade, 5%, I go, fine, fire away. Fire away. Just be careful with what you're doing. Also, crypto, Blue Mango's right, Bitcoin. Bitcoin and crypto is fun to swing trade as well. Nothing wrong with that. Let me see. Yes, sir. It doesn't bore me. I trade from monthly, weekly, and daily key levels. Higher time frames are the key to lower time. I agree completely. Yes, sir. A lot of folks, I'm not kidding you. I get so much static like on YouTube, and we'll get a lot of comments and things. Shane, you don't know what you're talking about. How are you going to trade a monthly chart on a 1-minute chart? And I'm going to tell them, it's all about the levels, guys. It's all about the levels. The problem is being disciplined and waiting long enough for those levels to come into play. And there will be some weeks. We had weeks over the summer where you're sitting there waiting maybe for like 4 trades a week, 3 trades a week. That is really hard. It's really hard to do. Let me see. Nat Niles. Good to see you, Nat. Welcome. Hello. Blue Mango. Bitcoin, baby. All right. We'll take a look at Bitcoin too as well. Nicola. Good to see you, Nicola. Welcome. If you have any questions at all, be sure to ask. Eli. Well, that's the name of our running back here in Missoula for the University of Montana. Eli Gilman. He's a stud. He's a fantastic player. Let me see. Eli. Have you ever seen a triple headed shoulder pattern? No, I've seen triple tops, though, W's. Well, I mean, W's technically could be called a double bottom. You can look at them the other way, too, as they're triple tops, whatever. But, yeah, I've seen a lot of triple tops. I love triple tops. It was a pretty good one on the 5-minute chart there. All right, guys, let's get back into price action here. We've got a few fundamentals that I do want to cover. Just not really, we pretty much know our mental mindset for Mondays. I cover this every week. We can go ahead and hit it again. Remember, Mondays are always slow. Not always. Typically, if you're going to see a big market crash, you'll see it on a Monday. Also, where the markets open is vastly different a lot of times from where they closed on Friday. But I like the game plan. I like to watch the ranges set up and take a look at my news cycle and also my analytics. I want to really outline some trades. We've already outlined 3 for you. There are 2 for you today. We're going to outline 3 or 4 more. But I want to know exactly what I need to do as we roll deeper into the week. That's absolutely huge, guys. Absolutely huge. As far as what we have on analysis, analytics, we always want a game plan. Be ready. Be ready for everything. What's the old saying? Be ready for everything just in case. And as traders, things happen so fast. We need to know what we need to know before we need to know it. Mondays are a great time to know what you need to know. Nail down what you need to know for the week. As far as what we should be doing with our trading, I recommend lower risk trades on Monday. Of course, you need to get in a trade and take a few plays if they're there, but I really don't want to lose a bunch of money. I want to get into the green as fast as I can. That's what I was taught to do. The idea behind our trading was start trading with other people's money as fast as you can. I really like that mentality, and that's what I've stuck with over the years. That stuck with me. So we've got really our week 39. We've sort of already covered it. Tuesday, lots of stuff out. Tomorrow, Wednesday, lots of stuff out. Thursday, probably the slower news day, and then Friday, NFP is big, but we have to be ready if we don't have NFP because of that government issue. Definitely want to look at that. News of the day today. I don't know. I mean, there's not much news out. There really isn't. 3-month and 6-month T-bill auctions, U.S. Treasuries, we're looking for yields to keep falling, and they really didn't. So we've sort of reached maybe an area where you're going to see more stability around the U.S. dollar. Right now, we're off about 0.25% with the DXY. A lot of that's correlated to your bond markets, not necessarily because bonds do something and the USD does something, but it's more along the lines of what investors believe monetary policy is going to be moving forward. So if we did see maybe a big drop in yields again today for these 3 and 6 month short-term instruments, that probably would throw more fuel on the fire for the bearish side of the DXY, just because long-term investors probably are pricing in a multitude of rate cuts as we roll towards the end of the year. Definitely want to be aware of those yield auctions, but you don't have to. It's not a market driver. I like to reference them because it does show us where the big money folks are thinking policy's headed, and that's absolutely key. U.S. President Trump speaks. I believe Trump's speaking right now. I don't know what he's saying, but I believe there was a there was a conference there in the White House with Netanyahu from Israel. FOMC members Larry Williams, I believe Williams is the New York Fed chairman. So you're going to want to keep an eye on that. And remember, these FOMC members, they're all trying to get in line maybe to be the next FOMC chairperson. Big deal. I call it a race to be the biggest dove, because they know that the biggest dove is going to get the nomination from the Trump administration. They want somebody that's going to absolutely slash rates, and they want it now. So all these comments from the FOMC members, look for them to be pretty dovish. All right, guys, let's see. Eli, Great Britain pound USD on the daily chart. Yeah, we'll take a look at that one as well. So Great Britain pound USD, dollar yen, and then we'll also take a look at Bitcoin. All right. Yes, sir. Oil broke through my monthly key levels at 70. So aggressive. I mean, I don't know. I'm seeing U.S. oil trading right around 63. I don't. You could be looking at UK oil. I will tell you right now that U.S. oil rejected 65. We nailed that one last week, if you remember. I'm still looking at the downside of that, guys. I really am. And we'll dig more into the futures and the volumes and things as the week goes on. But there's no real need to do it right now, I don't think. Let me see, Nicola. Let's see. As a newbie, I think the trade wave will be the best strategy for me to start with, or the trend wave. Excuse me. I'm sorry, I can't read. I can't read today. Now, let's see. As a newbie, I think the trend wave will be the best strategy for me to start with. Well, Nicola, if you're brand new to the markets, I always say it. Head on over to the How to Trade trading room. Go on over to howtotrade.com. Sign up. Everything's free. Go in there and check out some of the strategies that we have lined out. We've got some price action strategies that are very basic. I understand with the Fibonacci's and things, I can lose folks that are brand new to trading, so don't panic if you don't understand that. But as far as if you're looking for strategies, the How to Trade Calm YouTube channel, check out those strategies out. We've got a bunch of strategies on there. The EMA strategies have been some of our most popular. You're going to want to check those out. They're a great place to begin, and we have tutorial videos on everything. So if you're looking for a strategy, that's a pretty good place. But the trend wave, if you like it, good risk management, get in there, do some back testing, make sure that you understand exactly how that thing functions before you dive in with real money. Start slow, work at your own pace. There's no reason to rush. This is a marathon. This is not a sprint. And as soon as you get your strategy and your risk management dialed down, you're going to be in great shape. Let me see. Lebo, may I ask, what EMA settings would you recommend for swing trading? I use a 13-period EMA. That's my go-to. That's what I go to. That's what I was taught. 13 period EMA. All right, guys. Although for a crossover strategy, if you're swing trading with crossovers, 9 EMA, 20 EMA. The 920 crossover on daily charts and 4-hour charts, we've called a lot of winners using that thing. It's pretty good. It's pretty good. That's what I would say. All right, guys. Here we go. Metals blitz. XAU USD or XAG USD. This is your silver market. This is your spot silver market. It's been an absolute explosion. An absolute explosion in September, up about 18%, guys. That's absolute. I mean, it's huge. I don't really know what to make of it. We're going to look at a few reasons why. I listened to some silver analysts that believe this thing's going to like 90 or even 120. I don't know about that. But what I do know is 50's coming up, and it's coming up fast. This is a big-time breakout. Now, why did we break? We broke because we took out 40. Now, if you're brand new to the markets, that's fantastic. These concepts are relatively straightforward. Now, you'll see there's no real significance to that. That needs to be dialed in just perfect. It's, say, a 40 area. Okay, 40. That's it. This is a monthly chart. We went right up to 39.52. We pulled back. We tested 39 again. That was your top. And then what happened? Boom. Knocked everybody out of the market and went higher. That's fantastic stuff. That's what we saw from the gold market right at 3,500. That was that bullish pennant I covered every single day, seemingly all summer long. This is a big deal. 40 was a big deal. We knew that. What's the next big deal? 50. No question about it, 50. Shane, why is 50 important? Because your previous all-time high is right up there at 49.81. So if you want to be sort of a stickler, and this is what the technical guy was talking about earlier today. He really likes that all-time high as being potentially an area of resistance. I don't know that that's going to be the case. I think the area of resistance is going to be 50. Why did the all-time high set up at 49.81? Because the investors protected 50. The short sellers protected 50. You saw a combination of profit taking and fresh shorts coming into the market, and there was your liquidity sweep right there, a nice peak, and then they buried the market for realistically the next 10 years, the next 14 years, and now we're back. My gut tells me that we're going to new all-time highs. I think we take 50 out. It would not shock me if it happens today or tomorrow or the next day. It really wouldn't. I am a bit cautious, though, about what's happening here in the metals markets. Now, a lot of the market drivers seem to be very conventional. I don't necessarily buy into the conventional supply-demand narrative. Clearly, there's a shortage of silver. We know that, but we've known that for a long time, everybody. We've known that for a long time. So, London silver vault scarcity. This news broke earlier this month, and it was one of the reasons why we saw the big rally above 40. But take a look at it. Critical storage threatens markets. The unprecedented scarcity of silver in the London vaults represents a critical inflection point in the global precious metals market. So we've definitely got to be aware of things like this. This is a fundamental market driver. We believe that silver is definitely in a shortage state. What do you need silver for? You need silver for pretty much everything to do with semiconductors, conductors, and chip making. With the AI boom, most folks believe there's going to be an incredible demand for silver just to build these data centers. Now, I don't know that that's the case. I got to think that before, Meta or somebody wants to build a data center the size of Manhattan, which we saw that unveiled last month, I would think that they went and got some silver first. That's what I would think. I don't see launching plans and breaking ground and not having any silver to use as the conductors in your AI data farm. I don't see that. So I don't believe that. Now, I do believe the scarcity, if you don't have supply coming online to make up for the shortfall that we have right now, then you're headed for trouble because there's going to be a tremendous demand for silver just from the tech sector alone. And what we're seeing now is retail traders get involved. Now, why would a retail trader or an algo trader get involved right now? It's easy. Key levels. 40's gone. 40's out of here. So now the 40's gone. What's the next one? 50. 49.81's the all-time high. Everybody's watching that level, but why are they watching it? It's just short of 50. Well, probably, I don't know that we're going to issue a trade idea on that one. The reason why silver is a very high-risk market, I don't know about selling 49.81s. I think we could definitely wash that out and maybe run past 50. But we're going to wait. We're going to wait and see price action. I feel a lot better about 4,000 on gold, and I feel a lot better at $5 on copper. I'm going to show you in a minute. Now, why should we hesitate around that? You go, Shane, it's 50. I mean, you've been preaching big key levels because here's the kicker. That all-time high right there is right at 50. So you're looking at 49.81s. Everybody in the world knows where that is. What could happen right up here? We could see some scalping in front of that. We could also see some stop losses get run right there above 49 and actually get a momentum trade above 50 to happen in the very short term. I view that as a higher risk trade shorting up there. What would we rather do? Buy. I want to buy. I want to buy bad. The real question is how can we get an entry? Did we miss the big move? You could make a case that we missed the big move. A lot of folks believe we're going to 90 or 100. I don't know that to be true. I think 50 is a foregone conclusion. You would love a pullback, maybe a midweek pullback, 44, 45, $45 even, maybe 45 and a quarter. That would be pretty good. So I would be watching for something like that out of silver. We just have to be patient, but the destination to me definitely looks like $50. Really, very little question about that. All right, copper. Let's take a look at copper. This is a copper CFD. They also have copper futures and copper on the spot market. I like this CFD, though. This is very close to what we're seeing on the futures markets right now. And you can see what we have on the daily. Major move on the daily, up almost 3%. How do you want to trade it? Well, this is a little bit different, and I misspoke when we were talking 5. 5's a key level. It's not an all-time high, but it's one that we've approached, back in what, July? Okay. Up here is right around 6. This is clearly is a rebound type of a formation. If I wanted to be a seller, could I sell Fibonacci's? You probably could. You could probably go for that yearly range, it looks like. Something like that, right up at 5. Probably a pretty good trade. Probably a pretty good trade. We've already hit it once. Could we hit it again? Yeah, we probably hit it again. If we bought this market and said, okay, what would be my top side target? Probably right up in here. If you're an order block trader or somebody that really values the ICT stuff, that's the top of market structure. So if you're looking for a big-time profit target, 580, tremendous bump, though, the last several days out of copper. You'll notice that copper doesn't move in absolute concert with gold and silver, does it? It's a different market, but it's moving. And as long as it's moving, we can trade it. 499-ish, maybe selling 5, somewhere right up in there. That's a pretty good one. Maybe keep an eye out for a trade idea on your copper market as well. This one's one that I'm looking at very, very closely. Euro USD, I want to cover this one, and then we'll cover the markets that you asked. There was only 3 of them. Bitcoin, the dollar yen, and I believe we had one other one, didn't we? Great Britain pound USD. Okay, this is a look at your Euro USD. The pound's probably going to look a lot like it. This spike high right there, that spike low. Key levels I'm watching. We already missed out. We were late. The early bird gets the worm, and we were late. But right there, 62%, 117.50. Great sell. Fantastic sell. That was good for a quick 25-point pop. If you're looking for the next maybe port of call here, I would be waiting maybe for another bullish break. The dollar's definitely on the ropes. I don't see it changing this week. Maybe it will, but maybe it won't. 78% right up there at 118 or 117.82, maybe right around 118. That could be a fantastic sell again. Be watching for your trade idea there as well later this week. Okay, let's go ahead and get to it. Dollar yen. Dollar yen, interesting type of a situation. Big time sell off, no question about it. What can we really start to think about doing now? Buying. Absolutely. So what do you got? Spike low right there. We've got a chance to maybe get converging indicators there. Spike high right there. There's your pullback, 62%. It's the back end of the golden zone, 148.42. But you've also got sort of you've got a moving average. You've got a 13-period EMA, a 13-day EMA, right around 148.25. I'm going to sort of show you how I like to do these things. I like to mark those on that time frame. Typically, I would use blue because that's the color of my moving average. So I would have that marked. Let's go to a different time frame. Let's step back to the weekly levels and see what we have. All right, interesting. What are we looking for? We're looking for converging indicators. That's really what it's all about. So what do I want right here? We've got a 2-week runner in the dollar yen. What are we looking to do? I want to buy the market. I have a bullish bias, right? Potentially. Voila. That's exactly the type of thing that I'm looking for on a daily basis. Daily EMA, right around 146, something like that. 148.25. 38% on the weekly, 148.22, 148.25. That's a fantastic zone to be bidding. Right now you're printing 148.58. If you want to play just an elasticity play, that's a fantastic trade. That's one that I would definitely be looking at, and I wouldn't take my analytics any further. I'd say, okay, we're about 23 points off of my entry level. Entry level probably right around 148.25, maybe 148.29 if I'm very aggressive. That's probably going to be potentially the bottom of your weekly market. That's a pretty good one. And remember, nothing's guaranteed. If these things break, they break. If you get too many sellers there, it won't work. But if you go down 62%, 147.25, that's fantastic as well. It's only 100 pips away. We could definitely, if we lose here, we can definitely look there. Am I bullish? And this is where I lose everybody typically with the analytics. Shane, are you bullish or bearish? I'm neither. I know I don't really like the U.S. dollar, but I know what the BOJ likes to do with the yen. We're just playing elasticity. Finally, this thing moved. I would be looking to play the golden zone. 78% even would be pretty good. We've got a very good chance of scalping each one of those levels successfully. The only one I wouldn't touch probably is going to be your 50%. But even that, we'll wait and see what happens this week. Maybe if we don't get the big pullback, we could get that next week. So that's a good look at the dollar yen for me. As far as what we're looking at Bitcoin here, Bitcoin 114. We just really wanted to be patient and get our pullback right around 106, maybe 107, somewhere down in there. Didn't get it. We didn't get it, so that's sort of a bummer, but your low right there is 108.652, and now you're back up to 114. To me, being patient is everything, especially when you're looking at a Bitcoin, but I definitely want to be, I want to be in there to the bullish side of this market. It's just one of those things that we've got to be patient. It's a bullish pennant that's setting up. I don't want to outline that just yet. Let's wait for October trade, which is coming our way very, very shortly. But once October starts, if in fact we close up in here, you're going to have sort of a 2-month compression period. That's going to be pretty much good enough for me to say it's a bullish pennant. But just to be incredibly obvious about what I think about it, no question. Key numbers. What's the top of the Bitcoin market? 125. We break above 125. There are no rules. We could see 150. We could see 175. We see any of it. A lot of folks believe we're going to 250,000 in the next 12 months. Why stop there? Why not just say 500,000 or 750,000? I genuinely don't know. But we know how to trade it because we have a system and a way to approach the markets. All right, one last one was the Great Britain Pound USD. And that was, Great Britain Pound USD on the daily time frame. I believe Eli wanted to take a look at that one. And there you go. Daily chart, very, very, very similar to what we're looking at on the Euro USD. Spike high right there. 62%. I hate being late, but sometimes we're late. Good stuff. I would be watching this area very closely if I was trading the Great Britain Pound USD. If we do get that rally, then price will reach that area of disequilibrium right up around 135. Yes, sir. We would definitely love to take that trade to the short. So your 13-day EMA right now, as it stands, is 134.82. That's probably going to come down a little bit on tomorrow's session. Really a good kill zone up there, and we're not that far from it, only about 134.25. That could definitely come into play up there. We're watching that closely as well. So as you can see, everybody, there's an absolute ton of good trades out there this week. We outlined a lot of them. Remember, things correlate. So I don't necessarily know that you take the Great Britain Pound USD 78% and the Euro USD 78% unless they go at different times. You don't really want to be short both of those positions at the same time, just in case the USD absolutely flatlines, and then you see the Euro and the Great Britain Pound jump against it. And if that was the case, you'd lose both trades. So you got to be smarter than the average bear when it comes to diversification and risk management, and I know most of you are. But if you're a beginner, if you have any questions at all, like I said, head on over to the How to Trade trading room. A few of you already have. That's fantastic. I will be answering your questions here in short order. Other than that, there has been a difference to the trade or to the streaming schedule for this week. Tomorrow was scheduled for about 11 o'clock, about 1 p.m. Eastern. We're going to be going early. We're going to be going about 10 a.m. Eastern, about 8 a.m. my time. I want to get in and trade that morning. We're going to look at some strategies too. We're going to be looking at 920 crossover potentially. We're going to be looking at the 5-8-13 EMA, which a lot of people really like. Today we just looked at Fibonacci's in my 13 EMA. So we're going to do something a little bit different tomorrow. If you have any questions at all, be sure to bring them. These live streams, that's what they're for. They're for you. So if you have anything that you'd like to ask, fire away. Don't be shy. Don't be shy. I talk fast. Sometimes if you miss a concept, I'll need to go back and recover it. It's not a problem for me. I have a lot of patience. All right, let me see. Lebo, I find trading the news so difficult. I've tried it and failed miserably, so I just stick to technical analysis. There's nothing wrong. Nothing wrong with that. Trading the news is very difficult. I'm going to be honest with you. We're the last ones to get the news. We are the last ones to get the news. We're retail traders. We're the last ones to get those jobs numbers. We're the last ones to know what's going on in the White House. We're the last ones to know what goes on in the Congress. We're the last ones to know what goes on in those boardrooms at J.P. Morgan and Citibank and all of them. What we can do is fall back on our analytics and our risk management. If we can do that, we can stay one step ahead of them, meaning we could follow them, but still be ahead of them with our risk management, our entries and our exits, and manage to make money on those volatilities. Been in it for 15 years now. That's the way it works. All right, everybody. I'm going to go ahead and sign off. You're absolutely welcome, Eli. Have a fantastic session. We're going to be back a little bit earlier tomorrow. So remember, the trading schedule has changed. I'm going to be up probably about 8 a.m. We'll be live my time, so 10 a.m. Eastern. About 3 hours earlier than we went today. About 30 minutes after that Wall Street open. All right, guys, that's a wrap. Have a fantastic trading session. Trade the action well, and we'll talk soon. See you.